Lord. Well, it is Friday, February 16th. I am Bill Roller. I am here with Michael Elerath on my right, stage right. And I have Michael Harding on my left over here. Amazing how this stuff works, and it's it's not a mirror, it's a camera. Anyway, so we're here with our regular update on finance, the markets, and real estate here in fabulous Clark County. I've been kind of a flattish week this week. The Dow was down 0.012%, Nasdaq off 1.35%, S&P 500 off 0.43%. So things are pretty flat zillid right now. I guess we're waiting for the Fed. Interest rates had a little bit of a scare over the CPI report, but the 30-year was only up 6.7 basis points to 4.448, and the 10-year was up a little bit more, 10.8 basis points to 4.295. So once again, we're kind of past the rally time, end of year rally, and a little bit of the January effect, and now we're back into the slog, the market slog. But some interesting things actually came out. Again, more on the AI side this week. The SoftBank, Mario Masi-san, who had a big slug of ARM holdings, said that they want to start an initiative basically with their big bunch of ARM holdings, as well as getting other companies involved into basically trying to take on NVIDIA. So that was kind of interesting. See if they can pull that off. So if they have a competition, you know, Macy's and telling Gimbals, kind of, or Avis and Hertz duking it out. And of course, NVIDIA's been the 100-pound gorilla, and now hopefully ARM and some of their guys will start competing with them. Also, there was news that Sam Altman, the CEO and founder of OpenAI, is trying to convince Congress to put basically almost like a Manhattan Project for AI, putting up to basically $1 trillion worth of chips to build something that are an OpenAI. I guess you call that Chat GPT on steroids or Chat GPT Infinity. So we'll see how that works out. And all I can say is open the pod bay door, Hal. So
Well, is it Steve Altman or Sam Altman?
it's Sam Altman.
Sam Altman. Well, I heard something from him this week that said the thing that keeps him up at night with regards to AI is that it's not regulated in any way. And so he's asking Congress to help regulate it because his concern is that there's no checks and balance, if you will. So right now it's just open range
Well,
and there's no
I,
limits.
yeah, I think he understands that there needs to be some kind of limiting on that, and he doesn't want it to be a knee jerk kind of reaction thing. If you want to control the regulation in your industry, try and get on the regulatory boards. Yeah, so I think he's
Right.
proactive in that respect, which is probably a good thing.
Yeah, and I heard that Nvidia has surpassed Amazon in terms of valuation.
Um,
And a few years ago, I think they're number five in the world in terms of valuation. Um, I I want to say they just hit the $1 trillion valuation mark, and they were saying like 5 years ago, wasn't it, struggling to survive,
wasn't
and now they have this massive, massive growth.
Yeah, it was they took a big hit over cryptocurrency. Their stuff was being used by a lot of the cryptocurrency miners, which kind of caused them to fall out of bed about 5 years ago. Like everything else, I've had positions in it back then, but I always need to check the positions I've gotten out of. because they can sneak up on you and take off like a moonshot when you're not paying attention. So that's the important thing. But hopefully, we got a big slug of ARM holdings, and hopefully that will be the next NVIDIA. Uh, the strong
Yeah.
possibility
And
of that.
speak, speaking of cryptocurrency, Bitcoin, I heard recently hit the 50,000 mark.
Yeah,
Or
Bitcoin is
was
up.
it Bitcoin?
Oh, yes, that would be Bitcoin. I see Ethereum has also had a nice move up. So we are seeing some frothiness in the market. One of the big companies out there, uh, Supermicro Computer, which makes a lot of the AI servers, had kind of a giant run up. And they're actually, I'm looking at them now, they're down 20%. Uh,
Oh,
so we may have seen peak AI here for a little bit, but let it consolidate. If this stuff went up straight up every day, this job would be easy. But whoa, did your car roll over?
my phone slipped from the thing I was holding it on
Oh,
because I received a call, and um, my phone started to vibrate because it vibrates when it rings, and it just bloop.
it kind of committed suicide. It jumped off the cliff.
Yeah,
So,
yeah.
so what's happening in the world of real estate there, Michael Harding? Anything fun?
Well, the latest market action report came out, and it's pretty interesting. There's nothing too discouraging that I saw. Um, but Lawrence Young, I believe his name is. Oh, I slipped again.
Oh no! Oh no!
I'm having a day. I'm having a day. But anyways, he said that he does not see the Feds cutting the interest rates the first 6 months of this year, but he said he wouldn't be surprised if the Feds cut the rate three, four, five times in the second half of the year. I thought that was kind of interesting because he made those remarks in reaction to the consumer price index. I guess there was a report that came out that showed that it was kind of unfavorable, if you will, because the inflation rate was still a little high.
Hotter, much hotter than expected. So
Yeah, so he said that, based on that, he doesn't see the Feds cutting the rates, but he wouldn't be surprised if they did several rate cuts in the second half as they attempt to get inflation down to the 2% level.
yeah, they were supposedly discounting six rate cuts, and now they're down to about three. Best case,
Right.
we get all in the second half.
Yeah.
Um, I
And,
saw you
and he
added,
also, say again?
I saw that you added a couple of screenshots to your regular report. I'm looking at this sales price percentage change versus previous 12 months. Do you want me to throw one of
Yeah.
those up there, or
Yeah, please. Yeah.
okay, so let's
Yeah. And that information is from the market action report that comes out once a month.
uh
And I thought, because I was going to include a couple slides, a couple screenshots from the Lawrence Young, the chief economist for the National Association of Realtors, but I decided that it's more pressing to have the information from the local market here. Now you got to. Is there any way you can make that a little bit bigger? Because I'm on my cell phone and it's
ah,
kind of
well,
hard to see.
how's that?
There you go.
Is that amazing or
There
what?
you go.
We have
Oh,
the
look at
technology.
that. We have the technology. But as you can see, there's not much change from the previous 12 months to this, you know, compared to where we are now. So again, I think the worst of things, even though it wasn't that bad, the worst of things right now are in our rearview mirror. Now I will again put the caveat out there that everything is dependent upon the jobs market. So we're not having the explosive growth that we had a few summers ago or a few winters ago. But there's still still pretty good to be in a non-declining market. And
Yes.
could you show the others, please?
Okay, so here's the second one. Oh, excuse me. Let's try this. There you go. Residential trends. And
Yeah. So
close this guy.
we have the technology. We're just not sure how to use it.
Well, these things happen. All right,
Yeah.
we'll close this guy. There you go. A little bit
Yeah.
easier.
And so what this one shows is it compares the transactions from December to December of last year to January of this year. And as you can see, we had a lot more activity in terms of listings. So we had 74.8% increase of listings and 16.5% of pendings. And the thing that is of note is that means that we're going to we have a lot more inventory because we had 74% increase in let's say 75% in inventory, but 17% in transactions, and we went down 19% in terms of uh, the, the the closes. So that's something that we need to keep an eye on. The average sales price went down 4.5%, and that's why we keep track of the price reductions because that's what that indicates is whether or not we're in a declining market. And so if we look year over year, January 24 to January 23, um, we had quite a significant drop in the pending sales. But all things being equal, I think that's pretty good considering we were in a time frame where there was 7%, 8% interest rates. And imagine if someone had questionable credit, what their interest rate levels were. So I think that everything is pointing to encouraging signs that we're in a pretty solid market, and that I think the worst of everything is behind us moving forward. So could you
Okay.
the spreadsheet up?
Well, you want this other
Is there one
screenshot?
more?
Yeah, let's
Is
try.
there one?
I don't want to leave anything out.
Yeah. Oh, and what this one shows is pretty much what the previous slide shows, but it's just put into a graph, not a graph, but a chart like this. So, uh, yeah, because it gives you the previous year, the previous month, and all the numbers that were mentioned earlier, and it just does it in a way that is easier to see.
Okay. Well, we can close that guy.
But
And
the days on market is 64, and that's kind of high.
yeah. And so here we are at
The good
this.
old usual spreadsheet.
Yeah.
So again, this one is pretty interesting because we had this kind of coincides with that report of the increase in new listings because last week, even though it's the first full week of February, uh, there was 132 new listings, and not as many price reductions. There were a healthy amount of pendings and not as many solds. And as you can see, we're consistently behind under 50% in the total of transactions being under 30 days. And we're up there not too far from the 64 average with the days on market. Now, the one thing I'd like to point out is that this is just that range of days, the 3rd through the 9th of February. So that's why the numbers are different. So, but eventually those days will be wrapped into a report and I'll present it at the end of or when it comes out next month. So, but everything is looking pretty well. With a pretty significant jump and the list price per square foot and the sold price per square foot, what is that? Roughly 35,000, 25,000, somewhere around there, 25 to 30,000
Yeah.
each. So, but yeah, the market looks pretty good. Again, like with everything, it's going to be dependent upon the interest rates. So that's the one thing that we're gonna really need to keep an eye on.
Well, Fed won't allow too much of a real estate crash to go on, I don't think.
Yeah, I don't think so either.
Cool. Okay. Stop sharing
Yeah,
that.
and before, yeah, I don't need charts anymore. But the new starts, I want to say year over year is down 15% for residential, and for commercial, I want to say it's 8% decrease year over year. Um, I'll try to send that to you, Bill, so we can save it for next week.
Okay.
But that was an interesting thing. But again, I was gonna send that to you for this meeting, but then I saw the market action had come out, so it's more pressing, in my opinion, to give the current numbers from the market report than to because that's for here locally. That market action report is just for Southwest Washington. What Lawrence Young says is a national perspective, and so that's why I excluded it from this week's meeting. But I'll, if I remember, I'll get that sent over to you, and we could just show it next week.
Cool. Okay. Well, we'll loop back to you. I do have a question, but Mike Elrath, what did you find out of interest this week?
Well, let's segue on the real estate section. Housing starts are up. The jury's out on whether it's a weather-related catch-up or a new trend. Um, the two-year Treasury ended up over 4.6%. The 30-year Treasury rate, I believe, was of just over 4.2%. Mortgage rates are still below 7. Is that correct, guys?
Yes.
Yes.
Okay. All right. Earnings week is next week. NVIDIA has been crushing it because of the AI revolution. Its report will be announced on Wednesday. NVIDIA will be on Wednesday. Tuesday reports, these ought to be interesting when you're talking about consumers, consumer spending. Lazy Boy will report on Tuesday. The Home Depot will report on Tuesday, and so will Walmart. So we're going to be looking to see how their earnings were. Speaking about Walmart, whose symbol is WMT for those that look
Yes.
at some of the charts with abbreviations. It's going to have its first stock split since 1999 at the end of February, and it'll be a 3-for-1 split. We talked about this a little bit last week. The current price is about $170. So if that holds, then the 3-for-1 split will deliver shares at about $66 a share. Doing a quick math on that, maybe it's less than that. But
60.
anyway, 160, 170 divided by 3. Its current price earnings ratio is about $23. So that means for every $23 in price, it earns $1 net. So translate that to $100 worth of the shares. The earnings would be about $4.35. Walmart pays out about 30% of its earnings in the form of a dividend. So its trailing dividend yield is about 1.34%. That will stay. All those things will stay after the split. It'll simply mean that shareholders have more shares at a lower value, but the 3 shares they're getting for 1 will still be worth $170 in the current marketplace. As Bill mentioned last week, the lower price makes it more affordable for investors. So that is kind of favorable to the company in the short term, helping to hold the stock price at its current levels. It may not need it if its price, if its earnings are up, then the prices will go up and investors will rejoice. Bill mentioned the S&P 500. Now it has been up 15 of the last 17 weeks, counting this week as a negative week, even though it was barely negative, but we still got to count it. And then on the consumer side of things, average credit card balances are up to over $6,000 with high interest rates. According to surveys, credit has been used to pay current expenses. And as a financial planner, my advice would be do all you can to reduce debt, make higher payments, try to spend less on things that are not necessary, be more wise about how you travel and drive more efficiently, make a budget, try to stick to it. So that's what I know today.
Yeah. So my question for Michael Harding, back on the real estate side, is what's been happening with that great law case about the realtor commissions? Anything at all? You mentioned that the Washington Association of Realtors had pulled out of the National Association a couple weeks ago.
Right, right. I do know that Keller Williams has settled, and I want to say they're paying, I want to say $70 million in penalties or, something to that effect. Um, but in terms of the overall scheme of things, I have not heard anything new. Um, the Washington Association, because I did talk to the designated broker who's in charge of all the agents at the Keller Williams office that I work at, and she said that they kind of saw the tea leaves, and so that's why they withdrew from that. But it wasn't a total complete withdrawal. It's not like it's more like a separation than a divorce. And I guess they're back together in the sense that um that they still follow the guidelines of the National Association of Realtors, but they're just not as reliant upon them as they were prior to the lawsuit. So they're still together in that sense, but just not as reliant because there's certain rules and regulations. It's kind of like if you get mad at a restaurant, you can't leave the FDA. Kind of that thing. You can be mad at the restaurant, but there's no way you can get away from the rules and regulations outlined by the FDA.
Right, right. Well, cool. Well, we'll keep us posted.
Yes.
Hopefully somebody will emerge happy out of this situation,
Other than the attorneys.
other than the attorneys. Yes. Anything else you'd like to add there, Michael?
Nope, there's nothing for me other than we'll just keep an eye on that. And Bill, I'll try to get that information to you so we can have it on hand for next week.
Cool. Michael, you got anything? Michael Elerath?
I'm clear, I think. Thank you.
Okay, let me stop recording then. See you all next week.